So the benefit that Indian traders are getting from engagement with Australia is moving twice as fast as it is with the rest of the world, and we're delighted about that. Over the last 2 years that ACT has been in place, we've seen 20% increase in the growth of Indian textile exports to Australia. In agriculture, it's 35%. In automotives, it's 100% increase. So we've really had a super 2 years, and we're very excited about where this agreement and the strong linkages between our economies are taking us.
What is your view on the comprehensive economic cooperation agreement? How do you see it progressing?
We're working very hard. I think we've had 9 rounds of formal negotiation, and I think activity is intensifying. Our chief negotiator was in Delhi just last month, and I've had, just since the start of the year, a number of key engagements with the most important figures on the Indian side. Look, you know, we're not going to put a timeline on it. We want a good agreement, and we will take our time to get that right, but we are optimistic. And the two sides are very closely engaged, and there's a very high level of trust. So we're optimistic we will get there.
We're also at a very interesting time because we're just a few days away from our union budget being presented, and yes. I understand you met Minister Goyal. Were there any recommendations that you made for this budget, something that can give a push to green hydrogen, EVs, automotives, PVs?
Oh, look, we'll leave the Indian government to frame its budget in the best way it can. My message to Minister Goyal is that we are all in on India. We are investing $200 million just in government support for business. We are very keen on the second phase of the free trade agreement, and we will shortly be announcing in Australia a new document that will give a picture of the future designed for Australian traders and investors to have them better understand what the opportunities are in this country.
All right, so that was the Australian ambassador on trade opportunities between India and Australia. Moving on, increased thrust on trade modernization, bullet trains, station redevelopment projects and freight terminals are among some of the key demands of the railway sector. The sector was allocated a capex of 2.6 lakh crore rupees for the last budget. We're now joined by Umesh Chowdhary, the Managing Director of Titagarh Rail Systems. He's also the Chairman of the Railway Division of CII. Sir, thank you very much for joining us. What do you think should be the focus of the union budget of the Finance Minister when it comes to the railway sector? What's stopping your wish list at this point?
So, good evening. Yes, I think that the railways have been a focus sector for the government, both in terms of the freight and in terms of the passenger. You know, in freight, the railways, thanks to the Gati Shakti, the program, and also the overall target of the government to reduce the cost of logistics as a percentage of the GDP, there have been a lot of investments that have been made over the last few years in increasing the track capacity, increasing the rolling stock, the signaling and all of that. So we do expect and we hope that this is something that will continue. The railways have set for themselves a very ambitious target of 3 billion tons of freight loading by the year 2030, which means pretty much doubling from where they were last year. And that's not a easy target to achieve, but not an impossible target to achieve as well. But it will require substantial investments. On the other side, on the passenger side, the aspirations of the new India, the Viksit Bharat, are quite, I would say, quite clear. The way the Vande Bharat has met with success, you know, the way it's been applauded by the cross-section of the society and of the population of the country, it's very evident that the people of India are demanding safe, modern passenger transport on rail. And the Indian Railways have actually lived up to that expectations. We have seen the Vande Bharat sleeper being a success. We are now seeing the new versions of Vande Bharat sleeper that will be done by even our company. So all of this will continue, plus the bullet train. So I believe that
Mr. Chowdhary, if I were to ask you,
this momentum will continue.
Yeah. Mr. Chowdhary, what I would like to ask you, when it comes to deployment of more private capex, what in the budget will actually encourage you to invest more? What is that headline that you are looking for from Finance Minister Nirmala Sitharaman on the 1st of February?
I think it's a larger infrastructure spend because, particularly industry like ours is completely dependent upon how much is the infrastructure budget allocation by the government in order to grow the overall size of the railway. So if we see, for my company, I can say, if we see that the momentum continues, we would definitely go for further capex and capacity expansions.
Right. Now, when it comes to ease of doing business, ease of taxation, greater export push from India, what are some of the asks? Because over the last few weeks, through industry consultations, we've learned that the industry has been seeking GST rate rationalization, simplification of taxation, ease of doing business, the next phase of reforms. So what would be the priority areas which can really help companies like yours boost growth?
So in our sector, the GST was a problem many years ago when it was launched because we had inverted rate of duties, but now we don't have a problem. Those things have already been taken care of. Of course, it has been it's been a common demand of the industry in terms of the corporate taxation rates and all of that. So that is nothing which is specific to our industry. That is a common industrial request which is there with the government. For boosting exports, I would like to mention that the government has really done a lot for this Atmanirbhar Bharat and Make in India for the world. Whether it is the wheel project that has been approved by the railways, which we are setting up in partnership with Ramakrishna Forging, which will make India as a net exporter from a net importer of wheels, for example. But we do believe that our sector, the railway sector, is a fit candidate for some kind of a PLI. We have seen tremendous success in the consumer electronic sector, in many other sectors, which have paid the government many times over for the PLI that has been given by the government. We also believe that the railway sector can really pay the government in terms of higher revenue on GST and etc. if some support for PLI is given to our sector.
All right. So that's important from your view. You feel that railways is a fit candidate for PLI scheme as well. Thank you very much, Mr. Chowdhary, for joining us. Before we wrap this show, let's talk about Growth Code, a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed trading decisions. Market manipulation is something every investor should be aware of. But what exactly does it mean? Today, we'll focus on two common forms, spoofing and layering, and how to avoid falling victim to them.
Market manipulation is something that every investor should be aware of, especially tactics like spoofing and layering. These deceptive practices involve misleading others to create artificial price movements, putting regular traders at a disadvantage. Now, spoofing, for instance, happens when a trader places a large order far beyond the current price to create a false impression of either demand or supply. The goal here is to push prices in a particular direction and then cancel the order before it is executed. For example, a trader might place a large buy order on a stock only to push prices up and then will cancel it immediately as the price moves higher, tricking other traders into following the trend. Layering, on the other hand, is similar but involves placing multiple orders at different price levels to make the market appear more active than it actually is. These orders aren't meant to be executed but mislead others into thinking that there is either strong support or resistance on the way up. The manipulator then cancels these orders once other traders react, further distorting the market. So, how can you protect yourself? Watch for unusual order book activity on a stock, or if orders are placed and cancelled quickly, or if there is a sudden market depth change in a stock, be cautious. Stay informed about broader market conditions such as long-term trends, which are harder to manipulate. Use limit orders, avoid reacting to sudden fake price movements, and use tools to spot patterns of spoofing or layering, such as order flow analysis. By staying alert and using the right tools, you can protect yourself from these tactics.